Time now for an in-depth look at the market news this afternoon, and for that I'm joined on the line by Dr. Jun-sok, professor of economics at the Catholic University of Korea. Professor Yang, thank you for coming on today, now at a slightly different time.
Happy to be here.
Well, last week, of course, we saw the worst week on Wall Street in a decade or more, with the main indexes down 4% on Friday. Similar declines in the days before that. Today, Korean stocks got a little bump, though, after similarly rough few sessions. What's the story in the global markets and here in Korea?
Okay, well, as you mentioned, the United States had a really bad month of February. In the early February, everybody was really happy because the stock markets are heading toward historical highs. And then just 10 days later, we had unprecedented lows. We had 52-week lows in some of the markets. International markets have been more or less following the U.S. markets. So when the U.S. markets tanked, the Japanese and European markets and Korean markets as well tanked as well. Korea, KOSPI, and KOSDAQ lost about 8% of their value last week. As you mentioned, the things are going well for KOSPI and KOSDAQ today. And if you look at the U.S. stock market futures, the actual stock market hasn't opened yet, but if you look at just the futures, then over the weekend the price has risen, and that's probably because over the weekend the Fed Chairman Powell said that he's ready to lower the interest rates if he believed that the economy situation in the economy warranted it due to the coronavirus. Now, I'm not convinced that it's the right time to lower the interest rate in the United States, but I think that willingness by Chairman Powell to lower the interest rate has given new hopes to the stock market, and will probably do somewhat well in the U.S. market today and Korean market, unless you get some really bad news between now and tomorrow morning. Will follow and do a little bit better tomorrow as well. But still, I don't think it's healthy for the stock market to be overly dependent on what the Fed is going to do in the short term for the interest rate.
Well, now we have data showing South Korea's exports were up in February, surprisingly, perhaps, despite the coronavirus situation. How did that happen, and what stands out to you in these numbers? Okay,
well, if you look at the details, then it's not as happy a news as it was interpreted as. If you look at the total amount of the February exports, it rose by 4.5% over the amount that we had last February. Imports also rose by 1.4%. So at least if you look at the total numbers, then you can interpret the numbers as saying that we are starting to come out of the bottom. But the problem is, if you compare the working days of this February versus last year's February, we have about 3.5 more working days because, well, last year the Lunar New Year's fell on February, whereas this year it fell on January. Also, this year is a leap year, so we have one extra working day. So if you look at exports per working day, then it actually fell by 11.7%. So a lot of government people and the analysts are actually taking this as not so good news. Now, things leading the exports is semiconductor exports. It rose by 15.4%, and both the volume of exports and the prices went up. But there is concern that the reason that the semiconductor exports went up so quickly is that the Chinese buyers and other international buyers of semiconductors are worried that Korean manufacturers will not be able to produce semiconductors if the coronavirus gets worse. So they're stocking up so that it won't build a bottleneck. Now, if this is true, then that means that we're sort of feeding off the demand for latter part of the year rather than through any new demand. So there's a chance that even if COVID virus doesn't spread, because all the buyers are stocking up on semiconductors, semiconductor demand and prices will actually fall in the latter part of the year. But there is some good news as well. Korean exports to the United States and ASEAN went up, and machinery, auto parts, home electronics, and wireless communication equipment exports went up as well. So it's a bit of a mixed news, but if you interpret the numbers, I'd say that, sorry to say that bad news maybe slightly outweighs the good news.
All right, all very interesting points there. A lot more complicated than it might seem. But also lots to look at this week in terms of official numbers. Some figures coming out on trade, some on the incomes of South Korean households last year. What's coming up this week?
Okay, well, as you mentioned, the current account figures for the fourth quarter are coming out, and we're likely to see a current account surplus because most of the current account surplus is goods trade. And we know what the good trade numbers were for January, and it will be positive, but exports and imports are likely to be going down. And then for the income figures, well, it closely tracks the GDP growth figures, so it's about probably going to be somewhere around 2%, but maybe a bit higher because, well, the income figures, the exchange rates and Korean won was strong last year. And then another interesting statistic coming out this week is consumer price index for February. We're seeing now that the COVID-19 virus is hitting the demand very hard, and consumer price index for February may show us exactly how much the COVID virus is hitting the demand for Korean goods within the domestic economy. On the foreign side, U.S. side, we have the unemployment rate and the trade account coming up. The unemployment rate will show whether the U.S. Growth trend is likely to continue for this year, and that's important because the United States is practically the only economy that was really growing strongly last year, as well as the trade accounts because, well, if the trade deficit is shown to have worsened, then President Trump, during his re-election campaign this year, is probably going to hit protectionist policies harder.
All right, Professor Yang, we'll be looking ahead for those figures. Thank you so much for sharing your insights today.
Thank you.